These days it seems everyone is talking about the universal basic income, or UBI, as the solution to all of our problems. Well, unfortunately, things that sound too good to be true usually are. And in this video we're going to do a tiny little bit of math and just a little bit of reasoning, and we're going to find out very quickly that the universal basic income cannot work. And the reason for that is very simple. On the one hand, the universal basic income will increase government spending, obviously. But on the other hand, at the same time, it will reduce the national income, and it will do that in various ways, which we're going to look at. But it will do both these things so dramatically that in just a few years, any attempt to make this model work will collapse, and the entire country that tries to do it will collapse with it. To understand why that is the case, we have to look at two figures. On the one hand, the national income, or gross domestic product. That means everything that a country produces within a year, or everything that a country earns within a year, in other words. On the other hand, we need to look at government spending, or government taxation, because everything the government spends, it has to tax. The ratio of those two things would be the average tax rate, meaning how much the government taxes of how much the government earns. And this number, the average tax rate, is in most European countries around 50%. In France it's 55%, in most other European countries it's slightly below 50%. Now if you say it's not 50%, 50% is the top tax rate, the average tax rate is much lower. Well, then I just challenge you to take your own income tax that you are paying, add to that the income tax that your employer is paying for you, which you're not getting, so in effect you are paying that as well, and add to that the sales tax which you have to pay on everything that you buy. If you add those three numbers up, you will come up with a number that I guarantee, if you live in Europe, will already be far above the 50% mark. Now, there are many different configurations of a universal basic income model that one could come up with. We are going to look at a very simple one that covers all of the important aspects of the universal basic income. So we are going to say that everyone is going to receive 2,000 euros. All other social spending programs are going to be eliminated. That means Social Security, that means unemployment benefit, that also means retirement pensions. We are going to get rid of all of those things and just replace them with the universal basic income. So with this model we have covered the security aspect, so everyone can survive on that, but not only survive, most people can live with a certain level of comfort on that. But also we're covering one of the major benefits that the proponents of UBI say it is that we are eliminating bureaucracy, because there's no one who now has to figure out or administer who gets how much, but everyone gets 2,000 euros, period. So you could start arguing whether this number should be higher or lower, or whether it should be in addition instead the other programs, or if children should get less or nothing at all. You can argue all those things and vary the parameters, but then you would only result in the same model with a different color, and the same model which would have the same effects that we're going to discuss in this video. So let's look at Austria, for example. Austria has a population of 9 million people. Last year it had a national income, or GDP, of 400 billion euros. It had government spending of 200 billion euros. Of those 200 billion euros, 100 billion were social spending, Social Security, unemployment benefits, and retirement pensions. These we're going to eliminate. Instead, we're going to replace it with UBI, which means that 9 million Austrians will get 2,000 euros 12 times a year, which is 216 billion euros. Now we'll round that down to 200 billion just to make the calculations easier. So from the original 200 billion government spending, we're going to subtract the 100 billion for the old social spending programs, and we're going to add the 200 billion for the new universal basic income spending. So we will end up with a national income of 400 billion and a government spending of 300 billion. So the ratio, as you can calculate, 300 divided by 400 would now be 75%. So if the government doesn't want to go into debt or just print the money, which it shouldn't do, and I will address those 2 points later, if it doesn't want to do those 2 things, then it has to raise taxes from 50 to 75%. In other words, it has to collect 1.5 times more taxes to finance the universal basic income. So now we have looked at the government spending side, and we've seen that government spending would increase. On the national income side, on the other hand, the national income would be reduced in at least 3 ways, which we're going to look at. The first one is that the increased government spending would place an increased burden on the economy, meaning that companies would have to cope with a higher tax burden. So there would be less money for investment, there would be less production, and most importantly, and that is what we're going to focus on, there would be less employment. Because now that the companies are faced with a higher tax cost, they have to cut costs at a different place. And usually the biggest cost factor in most companies is personnel. So the first thing that they're going to do is cut personnel, in other words, fire people, in order to save their business. If they cannot manage, if the tax burden is now too high and they're not profitable anymore, they have to go out of business, and we lose everything that this business was producing and all the jobs that it provided. So this effect would reduce the national income. Let's say, for example, you own a little consulting firm, or let's say you own a little escort services firm, and all of a sudden your taxes go up. You have to pay more for taxes. Now, with some of your employees, that's no problem because they bring in so much revenue that they can cover the additional cost that is placed on their employment. With others, however, now the cost of employment, including the new additional taxes, is greater than the revenues that these employees brought to your business. So your business cannot support them anymore, and unfortunately you would have to let those employees go. And they have to find employment somewhere else, which will be increasingly difficult because all the other companies have the same problem. Now you could say that now that everyone has 2,000 euros more to spend, there's more demand, so your business would make more revenues, which would offset the higher tax costs. Well, the answer to that is simply no, because no new money is created. It's just that some people are disproportionately affected by the higher taxes, which is not offset by the 2,000 that they are getting. On the other hand, some are receiving the 2,000 and they're just paying a little more taxes because they just have less income in general. So it's just a transfer from those who are hit by the taxes to those who are benefiting from the new additional income that they get. And to the extent that those people who are losing would have bought something different from those that are getting more money now, there will be a shift in demand. For example, if those people would have bought cars and the other people are now buying washing machines, there is a decrease in the demand for cars and thus the car industry at the expense of the washing machine industry, which profits from it. But on net, for the entire country, there is no increase in demand. Now, this was the first way in which the national income is reduced. The second way is due to the fact that it creates an incentive not to work. That is because for many people, their spare time is something very valuable. I don't think this needs a lot of explaining, but before, where they had to sacrifice 40 hours a week in order to earn what they need or what they want, they just get this money for free now, and every additional hour that they still want to put in, they are taxed at 75%. So the reward for sacrificing your spare time is a lot smaller than it used to be, and also it's just to increase your comfort is not essential to you anymore because your essentials are already covered by the basic income. And many would even say that for them it's enough comfort, and so they would have an incentive not to work at all anymore since all their costs are covered. Now, could there be some exceptions where someone is now all of a sudden able to really focus on their passion and without any restrictions, and in the long run this person, due to the fact that it can do that, will contribute more to society than it otherwise would have? Maybe. But to say that on average the people are going to work more and harder, it just defies basic logic and it defies basic human nature. So you can argue about how big of a negative effect it's going to have, but definitely this incentive will reduce the national income. Let's say for example, you don't own the business, but you are one of the escorts, and you used to own 2,000 euros for a full-time job where you were working 40 hours a week. I don't know how much they earn, but let's just say it's 2,000 euros. Now all of a sudden you get 2,000 euros for free. And if you keep working full-time, you just get an extra 500 euros. In other words, you get 125 euros for a 40-hour work week. Would you do that? I'm sure for many the answer is, why bother? So this was the second factor that is reducing the national income. The third one is something called brain drain. And that is the fact that because the best and the brightest in a country are hit the hardest by this, because supposedly they earn much more than the average person. So if they have to percentage-wise pay higher taxes, in absolute terms, they have to pay much more. And it's not offset by, for them, the tiny amount of 2,000 euros, which they're now getting in addition. So this concerns entrepreneurs, doctors, top managers, top athletes. All of these people now have an incredible incentive to leave the country and go to another country where they are allowed to keep more of what they earn. Let's say, for example, you're not just an escort, you're the finest escort in Vienna, and you make 40,000 euros a month. Now with the new UBI, you would have to pay 30,000 of that, 75%. So you would end up with 10,000. Now, of course, you get an extra 2,000 from universal basic income, but still, that really doesn't cover the whole additional cost that you're paying now. So for you, the incentive to leave the country to a place where the tax rate is, for example, 25% would mean that instead of getting 12,000 for your work, you would now get 30,000 for your work. So this, I would say, is a huge incentive, which probably many people would take and leave the country. Now, the bad thing about the brain drain is that, of course, these people now have a greater share of the national income, and when they leave, the national income is disproportionately reduced because they take a lot of that national income with them to another country. Now, you could say this is the reason why every country should implement a universal basic income so that you cannot escape the system. Now, in that case, I just have to say this is simply impossible, because the more countries sign up to the universal basic income, the higher is the incentive for those countries that haven't done it yet not to sign on. Because let's just say, for example, all of the G20 countries implement a universal basic income. That would mean that a country that hasn't done that yet, let's say Thailand. Thailand now has the incentive. If they don't implement the universal basic income, they will attract the best and the brightest from the US, from Europe, from China. All of them will have a huge incentive to move to Thailand, where they have to pay much less taxes and where the weather is a lot better anyways. So they could basically pick and choose the Nobel laureates, the top athletes of all of these countries, and choose which ones they want to allow in their country. And at some point, this incentive is so high that there's always going to be countries that do not want to implement this system. Now, again, you could say, well, then you have to force your people to stay in the country. But I mean, if you have to force your people to stay in their own home country, then you really should realize that you're doing something wrong. So we've seen that there are three factors which negatively affect the national income. And let's just say for our calculation that each of them will reduce the national income by just 2%. And this is, I believe, a very low number, because it would mean, for example, regarding the incentive not to work, that would mean that out of 50 people, only one person decided that it doesn't want to work anymore. And I think that's very optimistic, that just one person says, I'm not going to work anymore, even though they don't have to. So let's just say, for the sake of the example though, it's just 2% each, so the national income will be reduced by 3 times 2%, 6%. So let's go to the second year. In the second year, the national income has been reduced by 6%, so we're now at 376 billion euros of national income versus a steady 300 billion of government spending. Now, if we recalculate the tax rate, it is now at 80%. So all of the factors that we've been discussing before are now even stronger. Stronger incentives and so forth. As you can see, we're entering a spiral here, a negative spiral, where every year gets worse. Because the year after that, I mean, it doesn't have to be 6%, it could be 4, it could be 7, it could be 3, but definitely the national income will be reduced again. So let's say in the third year, we reduce it again by 6%, and now we're at a national income of 353 billion versus government spending of 300 billion still. Now the tax rate is at 85%, so again bigger. And what you have to also consider is, at this point, we will have reduced the national income so much there's just less stuff, less products, less services to buy out there. So with your 2,000 euros of basic income, at some point you will be able to afford much less with it. And then the calls will get louder that the basic income has to be increased. Now, if you do that at the same time as your national income is shrinking, now you're actually raising government spending, you're just accelerating this negative spiral, which will end in a collapse of the system, and it will drag the country that is doing it with it. Now, another thing I haven't talked about yet is that there have supposedly been experiments of some countries that have experimented with universal basic income, like Canada and Finland. Well, the problem with their experiments is that they just took a selected group and gave these people a basic income. The problem is it's very easy to afford to give a small group a basic income. It's not that easy to give an entire country a basic income. So what these studies disregard is the major factor of how to finance the whole thing. So in essence, what they're doing is they're giving some people a bunch of money and then ask them how they feel about it. And then they write in journals things like, studies show people are happier when you give them an extra 1,000 euros. So really these experiments are useless in explaining whether UBI will be successful or not. Now, as I said in the beginning, probably the government will not increase taxes, but it will go to government debt, and it will at some point start printing the money. Now, the reason why I haven't really gone into detail on these yet is because they are really their own kinds of problems. Because yes, they could prolong the period in which this model would seem to work, but in the end, they would just make everything much worse and create problems of their own. Just to give you an example for this, to finance the universal basic income with debt would be equivalent to a person who has just lost their job, but instead of now cutting back on spending and looking for a new job, what they do is they go to a bank and they get a loan for 500,000 euros, and they don't look for a new job, but they go out and buy a new fancy car, let's say something extravagant, a Ferrari. Now, from the outside, it would look like this person is really doing something right, because a week ago, this person was unemployed. Now they're driving around in a Ferrari. So from the outside, in the beginning, this would look very good, but it's just temporary, because very shortly, when the first payments come, this person will lose everything, including the beautiful Ferrari, and will be in debt for a long time. The same thing would happen with a country that would finance the universal basic income on credit. So we have seen that the universal basic income, if implemented, would greatly increase government spending, while at the same time reducing the national income by placing a big burden on business, by creating an incentive not to work, and by causing a brain drain where the best and the most productive people in the country will just leave. This in combination will cause the model itself to collapse, and unfortunately the country that is trying to implement it will go down with it.